Welcome to this week's Money Metals podcast, helping precious metals investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the fastest growing precious metals dealer in America, Money Metals Exchange.
This is Mike Gleason with Money Metals Exchange, and it is my privilege now to be joined again by David Smith, Senior Analyst at the Morgan Report and regular contributor to MoneyMetals.com. David, welcome back. How are you today?
I'm very good today, Mike. How are you?
Well, David, I wanted to have you on this week because you've always maintained such a level-headed approach to the markets, which is so important right now. First off, what's going on in silver? Are we in a danger zone now that we've taken out some key support levels and fallen below the 2013 low in the low 18 range?
Well, we certainly have dropped down below that 1820 to 1850 range. We're now in the mid 1750s level. And from a technical standpoint, it looks kind of on the negative side. But the thing is, silver does like to take out supposed charge support levels and then turn around. So we may be down here for a while, but the point is we're still in a band of support that goes down quite a ways further than what we are.
What do you have to say to the precious metals investor who may be getting pretty worn out by the market action over the last 2 or 3 years?
Well, it's been difficult for sure. We've been in what we believe is a cyclical bear market within the larger secular bull market, and that has a tendency to either scare people out or wear people out, as David Morgan likes to say. It's been hard for anyone with a position. But what's kind of interesting is the people that kind of understand this and can go against their emotions are continuing to add to their positions, especially the physical and the price level that we're in now. I was just noticing yesterday that sales of American Silver Eagles have moved up sharply in the last couple of weeks. The SLV ETF continues to add silver, and gold sales in Europe are picking up substantially. So the people that are adding to their positions either on a dollar cost averaging basis, especially the physical, or on a monthly basis, or simply when they have some extra money, still are showing a lot of support in their belief that this bull market is in a pause rather than being over.
Last I checked, the fundamentals for why you want to own gold and silver in the first place have not changed. I think we've still got governments spending beyond their means, central banks printing lots of paper dollars out of thin air. I mean, unless I'm missing something, I mean, is that how you're kind of looking at things too?
Definitely. I can't think of a single thing that's gotten better from the standpoint of the fundamentals that would drive the metals higher. What we have now is a situation of poor sentiment, and that's when a lot of people turn bearish, and the sentiment can override fundamentals, it can override seasonals, and then it can cause things to turn around in a substantial way, and the charts don't show that too well. They can show the level of sentiment, but they can't say just when that sentiment will change and suddenly turn in the opposite direction and cause prices to move substantially higher.
We've talked before about investor psychology and talking about the mindset of the market timer, for instance. And I wanted to talk to you about Bitcoin depression. I've heard you mention that recently. What is that, and how might it relate to the metals markets today? Because I think it's a good little example of what could happen.
Well, Bitcoin, of course, as you know, is an e-currency. It's a virtual currency. And when it first came out a few years ago, you could buy Bitcoins for less than $1. I was reading an interesting article on Bitcoin depression where this individual had spent around, I think he paid around 40 cents for his Bitcoins, and or 80 cents, I guess that was it. When it got up to $4, he sold them all for about a 500% profit, which in just about anyone's book would be a good profit. And then he proceeded to watch Bitcoins go from the $4 level where he had sold, because he figured that was a blow off top, to go up to almost $1,000 an ounce. And now the Bitcoin still trade around $450 an ounce. So that's a pretty hard thing to overcome if you no longer have a position. And so this is what happens if you think you can outsmart the market. And it also happens if you don't take a long enough view and you sell into rallies, and then at some point the market goes kind of where you thought it would go, or even a lot higher. But meanwhile, you've taken a profit on your entire position on the way up, and you either no longer have a position or it's small enough that it isn't affected by much, even if the price goes much, much higher than you had anticipated.
relating, I guess, a similar story to the precious metals here. You and I have talked a lot about palladium in the past, going back to early last year when you accurately predicted that this lesser-known metal would outperform the other PMs. Of course, it's been a bit of a roller coaster ride over the last 10 to 15 years, but it's been a great investment at the same time, but only if you stuck with it. So despite the recent pullback, palladium is still up a fair bit for the year. What is the palladium chart telling you? And then also give us some history of what's transpired with this metal over the last decade or so.
You know, Mike, I didn't fully realize just how interesting the palladium chart was until last week when I took another look at the 25-year chart. And I had kind of correlated this with the anecdote that I gave in one of my talks about an individual who bought palladium in 2005 at around $170 an ounce. There was a $50 premium, so he was into it. About $220 was his net cost per physical ounce. And palladium proceeded to go up to $350 and then down to $180 again and then up to $600 and down. And it proceeded over the last 7 or 8 years to go up and down to his point of entry several times on a monthly basis. And you could have found places where he could have market timed and sold some or all of his position in there. But the reality is, if he had followed virtually any kind of technical analysis, he would have been out of the market well before $600 an ounce, and then it dropped down again. And we hit $920 an ounce here just a few weeks ago, and it's now around $800. And so palladium kind of puts the matter to rest that technical analysis can always predict where things are going to go, because all of those bullish signals turn bearish at that point, and yet here palladium is, even with the retracement we've had of about $100 an ounce, it's still almost 4 times higher than where this individual bought. And this particular person did not get out of the markets, has most of the palladium that they had purchased, and is still holding on. And the indications are that over the next few years that price may go much, much higher than it is. And I think it has something to tell us about silver, which looks kind of poor from a technical standpoint by now. But if you believe, as we do, that all the fundamental reasons are still here for much higher prices, then you kind of turn off that mental computer and just don't look at it on a daily basis and wait for the fundamentals and the actual sentiment on the part of the markets to turn in the direction that you feel strongly will eventually happen.
We're in the business of buying and selling, physical metal here, and if we're just as happy to buy metal back from customers as we are to sell it to them. And right now, of course, we're getting a lot more buy orders than sell orders. But every time I hear about customers that are selling big portions of their position, if not their whole position at these levels, I cringe a little bit. I mean, this is not the time to be selling, in my eyes anyway. I think we're seeing a fantastic buying opportunity over the long term. I would not want to be that guy that's selling at $17, $18 silver and looking back 3-4 years from now when it's $50 plus an ounce and just kicking himself because he just couldn't hang in there. You've seen that obviously a lot in your travels, haven't you?
It really is true, and it's so hard to go against your emotions, but your emotions tend to steer you in the wrong direction, especially at market turns. And as you mentioned, that person that sells out or sells a portion, or even the one that's afraid to begin adding or to add more if they have the financial wherewithal to do it, it needs to go against those emotions. All the great traders that I've studied for many years have been able to do that. They've been able to buy when it was very, very difficult emotionally and hold on until prices went into a much higher overpriced zone, and then sell some when the sentiment was overly bullish. And this is really how you make and hold on to significant profits. It's not easy to do, but it's also not impossible. You study how the great traders have done it, and then you try to emulate them in that regard. And I think, Mike, one of the things that really keeps me optimistic, in spite of all the bearish talk that I see today and the looks of the charts, is that we have not had a public blow-off yet. And when this happens, I believe it's going to be a global phenomenon with the Chinese and Indians participating as well as the Western countries. And it's going to be really something to see, because the endemic problems that we have in this country of overspending and debt creation and excess money creation is really going on in many other areas of the world as too. And so those items that lead us to believe that the supply-demand situation is getting really out of kilter for the metals, these are things that affect other countries as too. It's not just the United States and a few European participants like it was during the more sedate 1980 bull run in gold and silver.
So given everything we've seen here and where we are in the precious metals markets today, mainly silver and gold, give us your assessment of things, and then what kind of risk is there right now?
Well, you can look at you can put together a risk-reward scenario, and no one can predict the future, but I look at the belts of support for silver down into the $15 range and even a little below that. But if you assume that the risk, for example, is $2.50 or $3 from in here down into that level versus where you think it's going to go, and I think a case can be made that the risk-reward is probably 1 in 7 or 1 in 10, because once silver turns around and moves back up into the low 20s again, it has that potential to go up and challenge the all-time highs around $48 or $50. And people should remember, too, that in 1980 when silver topped out at around $50, if you adjust just for inflation, even if the government reports it, which is much lower than the actual real inflation that goes on, you're going to have a situation of anywhere from $125 to $200 an ounce in inflation-adjusted dollars, where silver would be today at the equivalent purchasing power that it was in 1980. So I would see 1 to 7 or 1 to 10 in terms of risk-reward, and I think for gold a minimum of 1 to 4 or 1 to 6. And it takes a while for these things to work themselves out, but when they really get underway, I think that's the potential that we're looking at. And the thing is, with people today that are not able to go against their emotions and either hold their positions or add to them, and of course without margin, once prices turn around, it will be impossible to know early on whether this is just a rally that is destined to turn lower once again, or whether the real thing is getting going and we're seeing the early stages of a massive bull run to the top. By the time that becomes obvious to most people, most of the profit position will be passed, and you'll now have a much higher risk position. Instead of the 1 to 7 or 1 to 10 risk reward we're talking about now, it might be 3 to 2, or even money. And so those are not good odds. So it's hard to buy now, but if you buy carefully and over whether it's dollar cost averaging or monthly basis, or as you have extra funds, then remember, it's not like you're buying something that is that's going to go away. You're buying what's been money for thousands of years, and you're actually exchanging what David Morgan calls paper promises, the currency in your wallet, for physical reality, which is money that you can spend and that can be traded in at the market price at any given day, anywhere in the world, and has been the money of final resort for thousands of years.
Well, very well put indeed, and patience is definitely a key virtue right now, so hopefully people can maintain that in this sort of rough environment. Well, David, we appreciate your guidance at frustrating times like those that precious metals owners are experiencing right now. Thanks for coming on, and we'll catch up with you again soon.
You bet, Mike. It's been enjoyable speaking with you.
Well, that will do it for this week. Thanks again to David Smith. Check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.